Welcome back to my video blog. Today we're going to talk about the market update for quarter one of 2021. Welcome back. So what's happening in the market? Let's do a quick recap of what's happened in 2021 in the first quarter from January to the end of March. So what we're seeing is that the interest rates are going to be affecting what's going on in the market. And the reason that we believe so is that they've gone from 2.65 to 3.09, or a 16.6% increase in the interest rates, meaning that any home buyer that's buying a home, their mortgage costs are going to rise by that same amount. And in some areas, it may be a little bit more than that because the market rates are always in flux, and we're talking about the 30-year fixed rates at the current time. So one thing we realize is that it has been an aggressive seller's market since June of 2020. And the actual overall inventory for this last quarter, what we've seen is that it actually dropped another 1% to 2,349 homes across the Orange County market. In the month of February, there were 209 new for sale signs. And as of last year, compared to today, at the same time, believe it or not, it was a whopping 4,159 homes on the market, or 77% more homes available for buyers to buy than today. So this huge lack of inventory is actually continuing to make its way into an aggressive seller's market. That's what we've seen. But like I mentioned, what we are realizing is that the higher interest rates, even though they're at fairly low historical rates, they are impacting buyers a little bit, especially in the lower price ranges, meaning anything above $750,000. In this first quarter, we've seen very little change in the luxury end of things, meaning homes over $1 million. We realize that the market's always going to be in flux, and it's always changing. But what we saw on our listings is aggressive buyer demand, and sellers were actually getting prices that they never thought they would get. For instance, we had a sale in the city of Irvine where the home, the last model match of the home, was actually at $692,000. This was for a 2-bedroom in Woodbury. That home just recently closed at $750,000. So that's a big gap. It's well over $50,000 more than the previous sale in that neighborhood, which was earlier this year. And the only way that was possible is that the buyer was a cash buyer and there was no appraisal involved. Because remember, the appraisals for anyone that's financing or getting a loan is only going to go off the lower of the purchase price or the appraised value. And we're seeing strong demand across the way. Even in the city of Costa Mesa, which is where I live, we had a listing where the last sale was actually in the mid 800,000s. That home actually sold for $922,000 with 21 offers. And what we realized is that it did not appraise. The buyer actually came out of pocket by $47,000 to make up that gap. That's not happening everywhere, but we will say that strategically, when we're looking at the market, that's something that's happened over the last 60 days. Going forward, the market forces that we see can affect the market are going to be increased interest rates if those continue to rise, increased inventory from sellers that do decide that now is the time to go ahead and make their move and sell and at the height of where they believe the market's going to be. And then also the last part of that equation is that if job growth continues to be stagnant, that may be the negative impacts on the market. But it happens day by day. But we are seeing a slight shift in demand because of what's happening with the interest rates, because homes are becoming a little bit more expensive based on not only purchase price, but the interest rates. But if you have any questions on what's happening in your local market or want to know kind of what's happening with the equity, feel free to reach out to us. If there's anything that we can do to help you and your family, let us know, and see you real soon.